All right, Allie, thank you so much. Inflation is cooling and high gas prices remain. Here to break it all down and what it all means is Wilsey Asset Management Vice President and longtime friend here at KUSI, Mr. Chase Wilsey. Chase, good morning to you, sir.
Good morning.
All right, so let me read you the headline. Perhaps you've been talking about this. CPI declined by 0.4% in June, making it the largest monthly drop since 2020.
Yes.
This is great news. You know, we're in this Middle East conflict, but there had been the lull. Prices of energy all came down and it affected everything across the board. Am I accurate in saying that?
You're accurate, but now unfortunately tensions have risen again, and now we're going to be looking most likely at an increase in CPI this month.
But what I would say to that is that means to me, and I've only stayed at a Holiday Inn last night, so I'm not the expert like you are, but it means to me that everything is energy related, the overall economy is good, and once this is solved in the Middle East, which it eventually will be, it's a lot of open road ahead.
Absolutely. I mean, I think the economy is on good footing. I mean, inflation is, how do I say this, is not as problematic as I think a lot of people make it out to be. And what I look at is headline CPI, that rose about 3.5% year over year. That was a deceleration from the previous month. And actually, if you look at core CPI, which strips out food and energy, was up 2.6%. Now, the Fed's target is around 2%. That's on PCE, a different measure. But CPI, PCE, they're going to be pretty close to one another. So, I mean, we're not like light years away from that 2% target when we look at that inflation number. But the problem is, again, how long is this energy situation going to last? Because it's naive us to believe that energy doesn't bleed into inflation in the long run. Companies can absorb the inflation shock from energy in the short term. Long term, they can't. I mean, I tell people, like my pool guy, for example, he comes, he drives around, he has chemical prices increasing. He just had to increase his prices. Understand it. You look at landscaping, you look at plumbing, you look at all these service businesses, they can absorb it again in the short term, but long term, if it remains, they're probably going to have to increase prices.
But long term, short term, that's all relative. What are we talking about? What do you consider long term?
I'd say if this remains for another 3 to 6 months, you're going to have to probably increase prices to offset the energy costs that you're absorbing as a business. If things can kind of settle back down to maybe where they were last month again, I don't think you'd have to see major increases from these businesses. You know,
we're going to talk to the gas buddy later today, but even looking, you know, as an armchair econ guy, I'm looking at the price of gasoline, elevated, but not obscene.
Yep.
It's been steady through this entire conflict, other than the initial spike when everything broke out. Is our economy so big that it can absorb being at war with somebody?
I mean, again, I think if we can have energy prices absorbed and contained, absolutely. I think we can kind of get through this. I mean, if you look at the Russia-Ukraine situation, it's still important, but it's not really weighing on the economy like it did in the initial phases. And again, I hate to say this because it's separating the war versus the economy, but you know, if this continues, I think it kind of becomes a byproduct, and it's not as talked about if it continues 6 to 12 months down the road, because it's not impacting the economy as heavily as it did in the initial phase.
Last question, what's the bigger challenge for this economy? Inflation or our spending?
I think the spending is definitely the bigger problem. I mean, because right now we're borrowing so much that's actually, I think, having a bigger impact on that 10-year treasury and borrowing rates. If we could actually reduce spending, that would help with long-term rates much more than I think the inflation.
I heard this alarming stat, we're borrowing $93,000 every second.
And somebody's got to pay that interest, and it's driving the interest rates up, unfortunately.
Ouch. Chase, have a good day.
Thank you. Thank you for having me.
There is